Welcome to Charts Today. My name's David Linton, and today's edition for Friday, the 3rd of December, comes to you from London. I'm back after a week, mostly in Milan at the energy conference NLET. So we start by looking at the dollar back above the cloud on the short-term chart. Remembering this is my weekly, daily, and 60-minute cloud, long-term, medium-term, and short-term view of the market. So the dollar is rising. And if we look at the euro, that therefore means that it's, of course, falling back below the cloud, bearish on all three time frames. We expect quite big falls on the euro next year based on some of these downside targets and the strength of the dollar. Sterling sitting at 132.83, just gently falling below that 133 level and just trending down. That is continuing. Against the euro, we're sitting at 117.5 and finding support on the cloud here. Has pulled back this week, but the reality is the trend is just gently up, where sterling is slowly appreciating against the euro. Looking at Bitcoin, where it's $56,000, just pretty steady. We've had a fairly flat week on Bitcoin. I own Ethereum, and that's actually had a better week. Looking at the S&P 500 index, we're up 1.42% this morning, so yesterday, so that is a bit of a respite off that low, but the fact is that we've made progressively lower lows and lower highs, so short term looking pretty bearish. And if we look at the futures this morning, they're slightly lower. The Nasdaq future down 0.2% is deteriorating, so markets really probably going to end the week with a bearish candle. That's, remember, we had one last week with Friday on that weekly. We've got another one this week, so not looking great. The VIX volatility has fallen back through the 30 level. It was above 30, which was the highest we've seen really for about a year, but we have actually pulled back and recovered a bit there. So that's the fear index is under control, but it's still relatively high. Markets remain fearful. The FTSE future is up slightly this morning. The DAX in Germany up 0.25%. The CAC Courant up 0.2%. But this is little respite given the falls we've seen in markets of late, markets being spooked by the Fed and inflation. And of course, coronavirus still very much on the minds of markets. The Japanese market was up 1.5%, but again, that's a rise in a downtrend on the medium and short-term chart. The Hang Seng was slightly lower. The Shanghai index was up 1%, but the Indian market was down 1%. So we're seeing quite a mixed picture on markets, although the Indian market's still looking very strong long term. And we will get a new upside target. If we hit the V key, we can actually put that target on, and it's some 75% higher and 50% on that long-term target. These, of course, are very long-term targets, but the Indian market still has that bullishness about it. The Aussie market was up 0.2%. Energy looking quite strong this morning. We'll take a look at that in a minute. Soft commodities continue their rise. Sugar up 0.86%. Wheat, little change, but these charts have got these big upside targets still to play for, so looking pretty good. Gold just can't get above that $1,800 mark, has had a pretty bad week despite these inflationary fears, so that's quite interesting. If we look at US 10-year yields, the interesting thing here is that we did pull back on the yield, and I had a client actually remind me that yields going up is bearish for bonds, so it needs to be taken into account that when we see the yields going higher, that's bad news for the bond market, and so we're seeing here that pullback. Interestingly, we moved below that thrust level, so the upside targets that we saw earlier in the week have come off the chart. Basically, the market's now seeing that the Fed is less likely to take action. So looking at the energy mix, crude oil's recovered quite strongly this morning, so that's looking pretty strong. WTI, we said above 68, we're bullish. That's where we've gone, so that's good news for long holders of oil price, but of course that still feeds into the inflationary mix. Nat gas prices also looking stronger this morning, just pulling back now, but we have got these targets a little bit higher. Emissions had a big day yesterday, and we've just seen here the price just rocketing once we broke higher, and no big surprises there. The long-term targets are, we're pushing towards those targets, and you just can't ignore them. A little bit of a fallback this morning, but these targets are still pretty strong. Gas markets, we've gone out to clients as bearish again this morning, just for today. We're seeing MBP, that candle yesterday at the end of the close. We're seeing this as a feature of gas markets, where at the end of each day we're seeing these sell-offs, and so that just shows the inherent weakness where the market just repositions itself to the downside, and so we are just seeing gas prices really struggling. Again, a couple of short-term targets kicking in this morning. Keep an eye on these 1 minute charts, and don't forget to play with your box sizes just to watch how those charts develop. We were neutral on power, and this morning we're a little changed. It's hard to be bearish on the German power price when you see these upside targets, and again, don't be afraid to play with the box sizes. And of course, on your OTC data, you'll have more granularity of the price there. That's it for today. Until Monday, have a great weekend. Happy charting. See you then.